So let's look at the half-year funding for startups across the African continent, coming from Africa, the big deal. So let's go through this now. What are we looking at? $780 million came into the African startup space in the first half of 2024, the first 6 months, down 30% or 31% versus the second half of 2023. Now, as far as the first half of 2023, it was a 57% drop. So I hope you're following us here. Year on year, 57% drop versus the second half of last year, a 31% drop. How much equity came in? 513 million, which is about 66% of the total amount. It was 60% in 2023. So the equity portion was higher in 2023 versus the first half of 2024. And then how much debt? Because that's how much this funding they're made up, equity versus debt. 254 million, 33%. It was 38% in 2023. What else we got? What are the stats? We've got, so I think we got next up is the countries. As far as the nations that brought it in, I think it's, yes, there we go. Now, this is very interesting because Nigeria led the way in Q1. That's been usurped by Kenya now. Kenya, 244 million, 32% of the 780 million that came in. Nigeria in second place, 172 million. Egypt and South Africa making up your top four. There's some other nations, Benin Republic, Ghana, who else? Uganda, and some other countries. Yeah, right, Ghana, Uganda. There we go, 50 million in Benin, 29 million in Ghana, 19 million in Uganda, 14 million Morocco, 11 million in Senegal. And I think next up we've got the sectors or the companies that brought in the money. Yes, transport and logistics led the way, 218 million. Fintech was in second place. Energy and water, two very important things there as far as where these funding came in. So that also is there. And then, yeah, there we go. Move, which is in the transportation space, M-Copper as well, bringing in 100 million, 51 million respectively. Now, another thing that's very important is the funding that went to male and female-led startups. Yeah. So as far as the percentage of funding, almost everything went to startups that have a male founder. Only 15% went to startups with a female founder, and only 8% went to startups that have a female CEO. So lots to dig in. Let's bring in our guest, Miracle Naji. He's an author. He's also a mentor at TVC Labs. Miracle, good morning to you. Thank you so much for joining us. So I guess big picture, you're in the venture capital space. Overall, what do you make of the 780 million that came in the first half of the year?
Good morning, Rotus, firstly, and thank you very much for having me on the show. And it's one that represents the decline that we have been seeing in the space that started off in 2023. We saw some improvement in 2021, we saw improvement in 2022, but since 2023, we have been seeing a lot of declines. And I think there are a number of factors we can attribute to that, but I think we'll just focus on three. One of them would be the non-macroeconomic factors, that challenges that we see. The second one would be in terms of a drop in the number of active investors. And then the third one is also going to be in terms of a drop in the number of mega rounds that we've seen. So on the macroeconomic side of things, we know about the interest rate hikes that affected the amount of capital allocation to risky investments like startups, right? And that really affected investment that goes into startups. And then also we know about the inflation part of things and devaluation of currencies that really affected the performance of most of our startups. There are certain milestones they're supposed to report that allows them to go back to the market to raise further funding. But because of the inflation issues and the devaluation of currencies, they had a lot of problems in that angle and they could not go to the market to raise further funding. Then the second aspect in terms of number of unique investors that we see in the space, you realize that in H1 2022, we saw an increase in the number of unique investors in the space to over 700 unique investors. And then by H1 2023, that declined from 700 to about 400 unique investors. And then H1 2024 as well, we saw a decline to about 300 unique investors. And a majority of these unique investors were foreign investors, right? Now, we saw a lot of pullback. Now, whilst most people want to look at it from the angle of most of the tough macroeconomic conditions is making them pull back, another angle to it would be that a lot of them are first-time investors, that the first time they invested in let's say that 2022 where we saw that spike, it's their first time actually investing in Africa. So most of them had a more wait and see approach that let us see how this investment plays out, then we can then double down on our investment. And it's something that we also saw, let's say I was part of some fundraising activities, and you find out that you speak to some of these investors and they'll be like, oh, I've maxed out on my allocation to Africa, or I've made one investment in this particular sector like healthcare and I want to see how that plays out before I make further investments, right? So what that means is whatever happens in terms of performance over the next 5 years, when certain returns will be realized from those investments, will greatly determine whether they are going to be investing more into the space or not. Then the third aspect is in terms of decline in the number of mega rounds. Now, mega rounds play a huge role when it comes to the total funding value. That since 2019 to date, African startups has raised over $15 billion, and 46% of that came from 27 companies that raised over $100 million and above, right? But it's something that we've seen that since 2022 H1 till date, there has been consistent decline in terms of the number of mega rounds. That in H1 2022, we saw about 9 mega rounds. And by H1 2023, that declined to 5. And then H1 2024, we also see further decline that there were just about 3 mega rounds, just one being over $100 million.
So move.
Exactly, that move being over $100 million. And then we also saw some high tickets like M-Copa that raised $51 million, and then Spyro in Benin that raised $50 million. So a combination of tough macroeconomic factors, a decline in the number of foreign investors, and also a decline in mega rounds, right, are some of the factors that led to a decline in the total funding raised.
Fantastic. What's the, we had a private equity guy on here a few months ago. What's the difference between private equity and venture capital?
Okay, makes a lot of sense. And private equity and venture capital both belong to that family of investment vehicles that invest into private companies, that it's companies that are not probably listed. Now, but then the line between the both of them tends to diverge when we look at the maturity level of the companies that they invest into, and then secondly, in terms of their investment approach. Now, when we look at venture capital tends to target more young companies that are bringing unproven innovations into the market. Now, because most of the innovations they are bringing into the market are unproven, it means that the risk of failure is very high. Now, to compensate for that high risk failure, that's why venture capital looks for higher returns, right? So in terms of maturity level, they tend to target more younger companies that are startups. Now, in terms of investment approach as well, you see that venture capital tends to take more minority stake in the company, usually less than 30%, and mostly do equity-based investment because those are more risk tolerant, right? But more recently, we have started seeing growth in debt because of the toughness when it comes to raising equity capital. But when we flip it, on the other hand, and now look at private equity. Now, private equity, whilst they invest into private companies as well, but they tend to target more mature companies that have stable revenue growth, right? And they just come in at that particular point in time to provide them with growth equity to grow further, or in some situations whereby the company is in distress and the company is struggling, private equity come in and then try to improve things. Another unique thing about the investment approach of private equity firms that's different from venture capital is in terms of the stake they take up in this company. That's private equity go for majority stake. Now, that majority stake allows them to take certain decisions like changing the entire management to improve operations and then probably sell in the future. And in terms of their investment approach, like I mentioned, they take majority stake and then they have a more diverse range of investment instruments. They use mezzanine, they use equity, right? So we don't usually see it, and they use senior debt to invest as well. So we don't usually see it like that in the venture capital space. So the differences are more around the maturity of the company and then investment approach.
Fantastic. Thank you so much for the breakdown. Let's talk about ways to get into competition within the African nations. What do you make of how much came into Nigeria versus, it looks like Kenya led the way here in the first half of the year. What's your stance on the amount of competition for capital between the African nations as far as the Big Four is concerned?
Yeah. So it's one that the Big Four African countries have really cemented their place as the majority players when it comes to the space. But we tend to see a lot of variations in terms of who leads per quarter, or who leads per, let's say, in terms of a half-year period amongst the big four African countries, that in some periods it will be Nigeria, some periods it will be South Africa. And I think a lot of that is affected by mega rounds. Right. So if we look at Q1 results, now the reason why Nigeria led the way was hugely skewed by the $110 million raised by Move in Q1. But when we now moved to Q2, there were no mega rounds for Nigeria. And that was when the M-Kopa deal came in for Kenya, and that greatly boosted the results for Kenya. So I think that majorly what tends to impact on who leads per quarter is highly influenced by the mega rounds that is raised. But I also think that what would be also interesting to see in terms of the data point is to see diversity across different sectors when we look at sectorial performance versus each of the different big four countries. I think that those big four countries that have more diverse sectors will show more resilience, right, than those that are maybe more concentrated in one particular industry, like energy, for instance. And in a situation whereby there are no mega rounds in that aspect, their performance tends to drop, right? So I think that when it comes to the African landscape generally, that the big four African countries are no doubt the major players. But the variations now come around what sort of mega rounds are raised and the sectorial activities.
Okay, speaking of the sector, I want to get to diversity. We'll get to that in a moment as far as female-led founders. But I think it was transports, fintech, and what was the third one? Energy and water or something? Yeah. Water. Well, what do you make of these sectors? I mean, I was thinking that we will see more of healthcare, health tech and ed tech there. But as far as the sectors, what's your take on the money that flowed in there?
Okay, so it's quite a very interesting one again, and underpinning the performance, we also see the influence of mega rounds, right? That historically, fintech has had the more funding, right? And because we tend to see more deal activity within fintech, but more recently now, while we are seeing logistics coming on board, and then we are seeing energy coming on board, is also as a result of high mega rounds that happened within this sector. So if you look at the H1 results, you see that the performance of logistics and transport was greatly influenced by the Move raise, right? The amount that was raised by Move. And then also we see that for the very first time in Benin,
yes, go ahead.
For the very first time in Benin raised $50 million, and it had to do with a debt funding by Afrexim Bank that moved into Benin. So you see that the huge influence while we are seeing those sectorial dynamics is mega rounds that are coming into the space. And that's the same thing that played out with energy, where M-Kopa raised $51 million. But what I actually think in terms of sectorial performance that is very interesting is climate tech funding, right? That we are seeing some sort of embedded climate tech innovation across different sectors like fintech, energy and transportation, right? That consistently from H1 2021 up until H1 2024, we have seen consistent growth in the share of investment that go into climate tech related innovation from around 13% in H1 2021 to around 43% thereabout as of H1 2024. Yeah. So I think when it comes to the established sectors like fintech, energy, and the logistics and transport that recorded the most results, it's hugely influenced by the mega rounds. But fintech tends to show more stability based off on high deal activity within that area. Yeah. But then what is also very interesting is how clean tech innovation is sweeping through different sectors and driving funding in that angle. Fantastic.
All right. I know we're two men here discussing this, but as far as diversity, what needs to change with the amount of funding that goes to male startups that have a male founder versus a female one? How do we get more funding to the female-led startups?
Okay, so if we look at the data again, I think compared to the historical average, there has been some improvements. That if you look at the historical average, in terms of funding that goes to female CEOs, about 5.8%, right? So when we compare that to 8% that we saw in H1 2024, there has been some significant improvements. But I think that more context will be given to that data if we understand, let's say, percentage of females that came to the market, female CEOs that came to market versus the ones that eventually raised. That will help us to really understand better the participation rate. Because if, for instance, the participation rate for female CEOs, let's say about 10% of them came to the market and 8% of them raised. So that's quite a huge result.
Right.
But until we have context as to what the participation rate was versus the amount that eventually raised, then we'll be able to have more insights. However, I also think that that structural barriers are a lot of problems that female founders face, right? Now, this structural barrier is very, very critical because there is a study that a female fund manager is 2 times more likely to invest in a female-owned company.
Gotcha.
And 3 times more likely to invest in a female CEO than the male counterpart. Now, that means that the more fund managers that we have that are females, right, is going to greatly impact on the percentage of funding that goes to founders, but when female founders. But when we now look at the data point, we see that there are a lot of gaps in that area. That according to McKinsey, that about 12% of managing directors and partners in private equity firms are females, right? So that means at that capital allocation level, there is a huge gap for females. And then I was also looking at some recent report published by Aurora Capital. I think as of 2019, when they started tracking, it was just about 10 female fund managers that successfully closed the fund. But we've seen some improvement on that, though, that by 2024, that has grown to, I think, about 45 female fund managers across 33 funds or thereabouts. So we have seen some improvements, and we think there are more rooms we can see more rooms for improvement, and that room can be created once we have more female decision makers at that capital allocation level.
Fantastic. We're out of time, but I will let everybody know your book, 365 Days in Venture Capital, coming out September the 14th, right?
Yes.
Is it based on Africa or Nigeria?
Based off on Africa ecosystem, right? And why I wrote the particular book is based on the fact that a lot of the literature that exists out there that I interacted with coming to the venture capital space are based on the US market. So I felt that exactly that a lot of context needs to be given to Africa, using our own case studies, using the success stories of our African companies, right, to give that context as to the operations of venture capital in Africa.
I'm going to get a copy because based on the amount of data you're giving us today, your book will be full. Miracle Naji, thank you so much for joining us. Really appreciate it. You are a true VC man. I appreciate your information.